analysis for step index is clear. I hope the analysis for step index is clear, guys. Nigel, do you understand?
Yes.
Yes. So we don't want maybe 2 days later we'll find the market there. Then you ask, Nigel, did you make any money? You yes. Yeah, I didn't enter. I didn't enter in. So you need to work on yourself, honestly. The only thing right now that is stopping you from reaching the next level is yourself. Do you know that? Whatever is stopping you right now from going to that 4 figures, 5, 6, 7, 8, is yourself. You are the enemy. You are your own enemy right now. Most of you actually know what you have to correct, but your problem, you are too lazy to correct things. You may try to be consistent today, tomorrow, next days you are back to your old habits. Consistent today, tomorrow, next days you're back to the old self that is used to blowing. That is not good. You now need to create a new habit of being consistently in the game. That is a habit. It can become a habit whereby you're always in the game, no matter what happens, even on a bad day, even if you have bad days, but you are always going to be in the game. So it's actually a habit that you can create, that you can work on to always be in the game. Other people have made blowing accounts their habit. There are people like that. Blowing accounts is now actually a habit. So you need to break that habit by starting to be consistently, grow bit by bit, small, gain your momentum. As you gain your momentum, you are also building that habit. Once that habit has been built fully, that's where you can see that, hey, step index, the way it's moving. I'm looking at this candle, man, this 4-hour candle, the way it's moving, man, it's something else. So if you check my step index the previous days,
yeah.
I'm looking at these weak rejections here. I'm looking at, where's my drawing tool? I'm looking at the weak rejections that have been happening these previous days. I don't know what trades were you taking, if ever you took any, but I'm looking at this. I'm looking at this. I'm looking at rejections both to the downside and the upside in the same region. So that one, it's a sign of indecision when you see that happening. Rejections to the upside and the downside. It's still trying to make a decision. When we are going up, we are going up. If you check here, we were going up. Here we are going down. So once we get back inside there, I can even take, personally, I can also take the trades. I can also take the trades. Because step index, it's somehow, I can say it's also I can call it a, what do I call this? What do I call this? An extra instrument that I look at if ever I'm not really getting any setups on VIX. I also have time to look at step. So whenever I see clear things on step, I do enter sometimes. I do enter. So that is your analysis for step index. I hope it's clear. If you have any questions, feel free to ask anytime.
It's okay, thank you.
Okay. So let's move on to the next instrument. Our common VIX. So the same thing we have been doing on VIX, whereby we make sure that we always analyze, we always We are always up to date with every movement that is happening, all the moves, all the major moves. We're always catching them. So the same thing that you also need to do for your step. Make sure that you're always aware where we're coming from, where are we going, where am I looking for step to go in the long run. So all those things is also what you need to do for your step index. You'll never go wrong.
Okay.
So VIX now, VIX. We have this trend line, which was the counter, or let me just put it like this, which was the counter trend line to the upside. Why am I saying this was a counter trend line to the upside? It's because of, if you check the previous videos, we spoke about this major upward channel. This major upward channel. So after this major upward channel, this was a major upward channel. But in that major upward channel, we also had counter sells, right? Same as here. Here now, so after breaking a major upward channel, we expect either a consolidation or a downward channel. After we break out of an upward channel, we expect either a consolidation or a downward channel. Right. So having that in mind, you realize that we formed a consolidation. We formed a consolidation. Broke out of this upward channel. Where's the consolidation? Consolidation is here. Started here. Same highs, same highs, same highs. Let me just put the...
Okay, it's D1.
Yeah, this is day one.
Okay.
That is where we get all our projections. The higher time frames, they tell the lower time frames what to do. You don't start from the lower time frames going up. So this is the range that I'm currently seeing. At first it was here, but then it broke out of that, broke out of there. So now I just shifted my support and placed it there. So here, same highs, same highs, same highs. But we broke out of a what? Let us not forget this. The problem right now, many people, they forget now what is happening to the left. That is your problem. You forget what is happening or what happened on the left side. You forget, you quickly forget. You mustn't forget this.
Okay. You
mustn't forget this. This is the same market. This is the same market. So it's like you're forgetting that we once had Corona, because that same incident is going to happen in the future. Do you know that? An incident like coronavirus, whereby people are going to be locked down, it's going to happen in the future. That is the fact. We can't run away from that. So we can't forget such incidents, because when you forget such incidents, what is going to happen is you're going to live ignorantly. Do you understand my point? We don't forget, we keep it in mind. Things, patterns are always going to repeat themselves in the market. You realize that this same upward channel that we had from here to here, take note of this. You realize that most probably, it can also be the downward channel that we're going to have after the break of this range. Do you understand my point? So that is also a very huge probability that can happen on the VIX, whereby that upward channel can also still be repeated in form of a downward channel after the break of this range. Remember what I said, after breaking an upward channel, either we have a range or a downward channel. So here we can actually get, here we're actually seeing the range. There's a range forming the same highs, high, high, high. Then there's lows here. So that can also happen, whereby we have a major downward channel like that. It can also happen. It can also happen. This can also happen. This can also happen. So after the break of that range, we expect a downward channel to be formed. That is what we are currently expecting. So you see now we're actually also projecting things that might happen. We're also looking at the possibilities that are possible for the VIX even in the future. That is also the same thing that you need to do for every instrument that you trade. Make sure that you also have an idea of what might happen, even though that which you project might not happen, even if it doesn't happen, right? But at least you had an idea. Even if it doesn't happen, you know how to respond. You know how to respond. So here we are, resistance, support, trend line, upward channel, broken upward channel, same as here, upward channel, broken, retested. So it's the same thing, guys. It's the same thing. It's the same thing. Upward channel broken, went all the way, retested. Same here, upward channel broken. We expect a what? Retest. Then we go. So these things are always going to repeat themselves. We're always going to talk the same thing over and over and over and over and over again. Over and over and over and over and over again. So that's going to retest the trend line, or remember that concept of highs and lows that we spoke about. That is a very important concept. Why? Let's look at the higher lows of this upward movement that was happening, right? Or let's look at both the, okay, let me mark the highs, high, high there, high there, and also high there, right? So for the market to continue going up, what it had to do was to break the high, retest, break the high. So here now it broke up but came back down, which never happened here. Can you see that? From here, if you check this high was broken. The market never came below it, right? We continued going, broke this high again. The market never came below it. Broke this high, but the market went below it. Can you see it?
Yes.
So that alone, it's actually a shift in market structure. Here, where the market was not even going below this level, not going below this level, but here broke, never continued, but broke below my level. So there has to be a shift there. Something has shifted. Something has already shifted. So after every shift in market structure, we always expect the market to come and retest that area to fully confirm if ever we really broke out. So that's going to come back all the way to that trend line, which is that support. So there's that confluence, which is that level there, and also this trend line. Those are two confluences that we can see already. So either there or let's look now at the higher lows. Here we're looking at the higher highs, right? Higher, right? Let's look at the higher lows. This is a higher low. This is a higher low. That one in yellow, it's also a higher low. From there, this one as well, it's also a what? A higher low. So the higher lows, whenever we're going up, our higher lows are never broken. Whenever we're going up, higher low, push up, break. What is broken is the higher highs, not the higher what? When we are going up, what is broken are the higher highs. The higher highs, these higher highs. They are the ones that are broken. Higher high, broken, broken, broken. When we are going up, the higher highs have to be broken. But when we are going up as well, the higher lows, they are not broken. Higher low, was it broken? No. Higher low, was it broken? No. Higher low. So this higher low now, it has been broken after the break of this level. The break of this level also resulted in the break of this higher low, which never happened previously. So already we can actually see that there's a shift. There is a shift. Most probably we are now looking forward to long-term buys, long-term sales, I mean. Long-term sales back to the support, back to the major support, based on those shifts in market structure that I'm simply showing you in terms of levels. So this higher low broken. So right now we are here. Market is currently below the level. So either, as I said, it's going to come back all the way there, or it's going to push further down from this level there. So what we simply do, once we've identified this on the daily, we go to a lower time frame than the daily. So our bias is now bearish. Our bias is a bearish bias. Our bias now is a bearish. It's mostly a bearish bias. Long term, it's mostly a bearish bias. Right, we have this trend line, broken, retested. So on the 4 hour already, we have a retest today. Already we can see a retest on the 4 hour, right? Let me hide this. Let me hide this as well. Right, already we can see a retest. So this was an entry point for sales. This level here. That was an entry point for sales. An entry, one could have even entered based on the 4 hour. Entry point for sales there. Our major target is always the bottom, which is the major support at the bottom. So if you zoom in, you realize that there was also another entry point that I saw, which was the break of this level. If you check here, market was failing, but then eventually we broke. Can you see that? Failing, broke, retested, continued. This as well was an entry point. You could have even entered on the 4 hour, even the 4 hour. But the stop loss was also small there. So a lot of opportunities people are simply missing. If ever opportunities are not called out for, you realize that people, they miss those opportunities. Yet we would have spoken about them. So here you can see the rejection there on this level here, which is the higher low that we saw on the daily. So if ever all goes well, the market can still push further to this level, which seems like a key level. Then from here, maybe bounce back up before continuing down. But if it breaks there, it's simply a continuation. If it breaks there, simply a continuation. Simply a continuation. But if it does come back up, we simply do the same things. The same things, we simply do the same things. So I hope it's clear. I hope everything is clear about the VIX. Is it making any sense? Or it's actually confusing you?
No, it's clear.
Okay. So we can also go further. 1 hour. 1 hour, we can also go further. Hey, the way this 1 hour candle closed. It's interesting. Interesting. So let's see. So we have a channel there. We have a channel that I'm seeing here on the 1 hour. We have a channel there. And we also have a third touch. Hey, this is actually an entry opportunity for the VIX. It's actually an entry opportunity right now for the VIX. Right now, it's actually an entry opportunity for the VIX. It's actually a selling opportunity right now for VIX. The stop loss there. Entry opportunity. Target somewhere there. Somewhere around here. So we can even go to a 30-minute maybe to get a smaller stop loss than the 1 on 1 hour. We can even go to 30 minutes and get a. So remember this level. Why am I still having this level? This level is because of the consolidation that happened before it broke out. Here, consolidated, faked out here, went back inside, faked out there. Then here, after this break, we spoke about the sell, we called out a sell, but then we never had any retest back to that level. Can you see that? So most probably that's where it can go if ever it comes here. It can go back there, then maybe go down. That will actually be something like a head and shoulder, whereby left shoulder, head, right shoulder, there at the level. Then this level here would be our neckline. So the cells, they can also be taken there at that level as well, around that level, or somewhere around close to this level as well. Respected. So around either here or there, the market can simply pull back to there. Then we'll simply take our trades. We'll simply take our trades. So we can even go to a 30 minutes and see What is currently taking place on the VIX? What is currently taking place? What is taking place? So there we are. 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 Stop loss is there. So here, even someone can come and do this. We are all speaking the same language. You can come and draw this, or you can draw like this. We're all talking the same language. Here it can actually come and bounce on the trend line, then boom. So do you understand the analysis for the VIX? Do you understand? Anyone with a question, with a query? Any questions or queries? Anyone with a question on the VIX? Is it clear?
Everything's quite clear.
Okay, that's good.
I don't know about the others, but yeah.
So I hope. So right now, as I said, that is an entry opportunity. That's an entry opportunity for the VIX. As we are currently seeing a sell entry opportunity. Then once we get to that support, we look at the reaction of price. Is price going to go back up to those levels that we marked at the top? Even if it's going up, it will give you entries even on the smaller time frames to also enter even the buys. So there are always going to be opportunities almost everywhere that you look at. Everywhere that you look at, you're always going to find opportunities to enter. So that is the current lookout for the VIX. We simply now want to see how price will play out. Then step, we spoke about step. We spoke about step index. We spoke about the step index. We spoke about the step index on the 4 hour. Hey, can you see what is happening, right? It's inside. Yes. Inside. So the same things that we spoke about, we expect it to break that recent high. Break this recent high. Break this recent high. Break this trend line. Break that recent high, break that trend line. We are good. Break that recent high, break that trend line. Then boom, you enter and you see how far it will go. Because here we are also seeing a double bottom. Then every double bottom, remember, every double bottom has a neckline. Every double bottom has a neckline. You draw your neckline. You draw your neckline. That is your neckline. So what we expect here, price can actually push, then retest on the neckline. That is why you have to enter after the break of this trend line. You can enter on the smaller time frames. Then the break of your neckline, you can also enter as well. The breakout of your neckline, you can also enter as well. Then boom, first target, second target on the trend line. So the analysis was step very, very clear, nothing complicated, nothing complicated there. I believe, Nigel, you are going to make good money there. good money there. So that is it, ladies and gentlemen. That is it. That is the analysis that we have. That is how we look at the market. We are always going to be consistent at the way we look at things, because we have been progressing with that way. So why not maintain that which is working? You understand? So that is it. 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 If ever you develop a question, feel free to ask. If ever you develop a question, feel free to ask. One of the major problems that I've seen with most beginners is the confusion of listening to everyone. That is one of the major confusions that I've seen when it comes to beginners. They have a major problem of listening to everyone. What do I mean by listening to everyone?
It's true.
You understand?
It's very true.
So that is.
I mean, it's like how we all have Google, and then like everyone can post, but you don't know who's a rookie, who's a pro, who knows what they're doing, where the information is coming from, how did they come up with such things. So you end up just taking in, let's say someone says, oh, oranges are salty. Because this, and then you just take that and put it in your head that oranges are salty, but you've never tried them. Yeah, something like that. It's just information is out there, and people are free to do what they want. So we just need to be.
It's a head door now. That is also another head door that you can come across in your journey. Too many preachers. What will happen is, if ever someone comes and say 1 + 1 is 2, another one comes and say 1 + 1 is 3, another says 1 + 1 is 4, another says 5, says 6, says 7, says 8. What will happen after you have listened to all of them? You might discover that you can actually be more confused than the way you were before you listened to them. All of them. You realize that you're actually in a better state than the one that you are now in, because you see some form of what can I say? You see some form of differences in information. Some differences, you actually see them. So, but what I've seen, one thing that I've realized, let's say we have 10 professionals in the room, and they're all given a chance to talk. Somewhere, somehow, you realize that 80% of what they're going to talk, 70 to 80% of what they're going to say, it's going to have a certain similarity. Somewhere, somehow, there's going to be a certain similarity in the way they articulate things. It's like the way preaching was done by Jesus. You realize that even the way those guys, these disciples, they later on went on preaching, somewhere, somehow, you could actually tell that in as much as these are two different people, but there's actually a similarity, a common ground in what they're saying. Those are only the moments that one can listen to 2 or more people. If ever you realize that somehow these guys, there's a certain common ground, but when you see a differences, when you see clashes, debates, something is wrong, and sooner or later you might actually be affected. Because if someone comes and tells you about spikes, about crashes, about spikes, about ticks, trading on the 1 minute, 5 minutes, then someone like me comes and tells you, my friend, 1 minute and 5 minutes, they have a certain weakness that they have, because they don't determine where price is going. they follow the higher time frames. That is one thing that I made a mistake when I was a beginner. I focused on the 1 minute, 5 minute, especially trading the crash and boom. I was trading them on 1 minute and 5 minute analysis. Then one of the days, I think I told you this story. Maybe one of the days, hey, the market actually, and at that time, I never used a stop loss. I was the stop loss. I could stop when I feel like, and now the market is opposed to me now. There's no return. Then I would say, now I'm the stop loss. Let's come out. But imagine you're coming out after the market has made a huge move against your position. Let's say you enter the sell. Let's say you enter the buy here. And you don't have a stop loss. Then you wait for price to make all this huge move against you to come out. It doesn't even making sense. It doesn't even making sense. So beginners are actually being affected a lot. I actually fear for them because the majority of them, they are quickly giving up, not because. So guys, I hope it's clear. I hope everything is clear. So guys, let us move. Let us move forward. Forward. Let us move forward, guys. It is my wish to see you moving forward. It is my prayer every day to see you moving forward. So if ever you don't move forward, personally, I feel like I would have failed. I would have failed, honestly. If ever I don't see you progressing, personally, I feel like I have failed. I failed. So please, even if you don't want to move forward, please, for my sake, please move forward.